and welcome to Chart of the Day Cafe for Tuesday, March 8th, 2016. Just going to read our disclaimer quickly. Trading stocks is a high level of risk and viewers should complete their own due diligence on any stock or underlying that they intend to own. 100% of the content of this video and communique is intended for journalistic and educational purposes only. This video and all indicators, strategies, and articles herein should not be construed as investment advice. Thank you for your patience with that. So we always start our videos off with a look at the Russell Index. We use the IWM, which is the ETF that represents the Russell 2000. We're looking at it on a 5-year monthly time frame. I always think it's important to step back and take a look at price from a broader perspective. You can see that this blue channel was important to the Russell. It traded within it through much of 2014 and then had this uptick up and out in early 2015. And then we had that ensuing really negative price action that brought us right back down to these lower ranges, well below the lower blue channel line. But price was defended in this area. We had these long wicks on the candles for the month of January and February. And so far, this is the candle shaping up for the month of March, which looks pretty encouraging. Having said that, even though we're up and over this blue channel line, it's all about staying there, and it's still very early in the month. So we're in an area of very strong overhead resistance. We will see if price can get up and over this area. Worth noting, I'm filming this at about 8:30 on Tuesday morning. Some very soft data came out of China last night. Chinese exports plunged 25%. The futures are off across the board pretty much in North America and Europe. Oddly enough, Shanghai was up ever so slightly overnight, but I think it's time to be really super cautious and careful. I'm going to move it away from the 5-year monthly to the 2-year weekly, so you can really see, although we're up and over the blue line, price has had a pretty aggressive move higher. It would make sense to me that it would perhaps move lower. If it's going to really indeed stay in this uptrend, I would think it would need to take a little bit of a breather here, refuel, and make another run at that area. Either that or we sell off and make lower lows here. So time to be really careful and cautious. Let's take a quick look at the Dow as well. I've got this very rough trend line drawn in. We are at that area, so we will see if price can hold here, and the same thing with the S&P. So worth noting as well, even though I don't have it marked on my chart, the S&P is at the 200-day moving average, so that's a pretty important moving average. We will see if it can hold and go higher at that level. The other thing I think worth keeping an eye on is the Volatility Index, which is looking kind of perky here. So we're looking at on the 2-year weekly. Let's take a look at it on the 9-month daily. It looks as though, it might be ready to move higher again, in which case the markets will sell off. So time to be extra cautious, extra careful. Will we hold these levels? We will see. I'm going to be really vigilant in the days ahead. So we will put out another video on Thursday. With that, I will leave you good luck and good trading, and see you Thursday.